Thank you everyone for joining me today. My name is Ibrahim Irfan. For authentication purposes, here is my national identity card for Pakistan, as required by the guidelines. Once again, as I mentioned, my name is Ibrahim Irfan. I am part of the MBA cohort of March 2024. Today I'm presenting a case and my opinion and suggestions for Brompton bicycles. Just to go over the roadmap of the presentation, we will first be discussing the scenario in question, followed by an overview of Brompton bicycles, and then, of course, the impact on Brexit, impact of Brexit on GDP and how the currency went into a free fall. We will, of course, discuss the depreciation impact on economy and Brompton, of course. Moving towards discussing profit maximizing strategies as part of how Brompton can leverage these strategies, improve its profitability while ensuring that they are hedged and protected against the currency fluctuation of the British pound. And of course, I'll also show my references that I've used here today. So the case study scenario that I have chosen is I will be an economic consultant that will be heading the Brompton's international operations division. And the part of my job is to make strategies on how we can further expand our international business to leverage and take advantage of the depreciating nature of the pound. The questions that have been asked from us is discuss what factors of the demand and supply of British pounds are responsible for weakening the sterling. Then, of course, we need to analyze the effect of a weaker sterling on Brompton's cost and revenues, and then, of course, recommend profit maximizing strategies for Brompton if the sterling continues to weaken. So these basically are the questions that we will be addressing in our presentation today. Giving an overview of Brompton bicycles, it's a bicycle manufacturing company based out in England. Its unique selling point is foldable bicycles that are durable and lightweight. They have a very, very popular fan following and are growing at a 20% annual growth rate, which is quite healthy and gives good remarks on the financial performance of the company. They also have around 30% domestic sales as compared to the international, which kind of signifies how Brompton is widely acceptable in international locations, and sales are driven beyond the borders of England, which is very good for Brompton given the fact that they have reached global status as compared to many aspiring companies that have only stayed domestic and leveraging their domestic sales to make profits. So Brexit, of course, was quite a mixed opinion vote that happened in 2016. Sterling fell by almost 0.25 basis points, 0.25%. Apologies. Sterling experiences its largest fall in a single day in 30 years. Against the US dollar. This is a remarkable devaluation or depreciation of the currency post the Brexit vote and shows how the UK economy was impacted by it. The reason for this depreciation, of course, was the political and economic uncertainty that engulfed the boundaries of England and how dollar was being purchased against the pound. Many international investors, foreigners, international companies, and even local companies were selling the pound because they did not see a promising outlook of the currency. Hence, there was a lot of supply of the British pound and a lot of demand for the US dollar, driving down the price of the British pound. There were also increasing trade frictions, which were evident from post-Brexit, which also caused a reduction in the demand of pound due to trade purposes, as because of the trade frictions, not a lot of trade was happening between the European Union and the UK. Of course, there was a lot of geo shift of industries and employees. A lot of people moved out of England, demanding foreign currency as they were leaving. And of course, a lot of international companies also moved their headquarters from London and England, moved to other European Union countries to benefit from the EU single rate, which is the euro, single currency. And of course, the advantages that those unified currency brings. So there was a lot of demand for USD and other currencies as compared to the dollar, as most of these companies were shifting their operations from domestic to international locations, where with much favorable returns and outlook. Uh, the government also reduced interest rates. The Central Bank of England reduced the interest rates from 0.5% to 0.25%, contributing another flow of GBP. Selling of GBP and of course purchasing of USD as investors and fixed income participants moved their money abroad to find higher yielding assets and higher yielding government bonds. Because as you can imagine, inflation was supposed to increase because of the weakening of the pound. Any imported item was going to cost more. There was a lot of supply issues between the European Union, further fueling inflation. Hence, it was expected that because of this higher inflation, the real interest rates would drop down to negative. Hence, the hot money flew out. And of course, the quantitative easing, where the government increased the money supply by 36%, fueling further fire to inflation. And of course, people looking to hedge their money by purchasing foreign currency as compared to the local one. Hence, more supply on the GBP side and more demand on the USD and other currency side. Hence, also changing investor expectations, leaving more money to flow out of England, and of course, pumping it into other jurisdictions where people can derive more money out of the situation. So impact of post-Brexit, of course, had a significant impact on the UK economy. The higher cost of living was expected because import prices were supposed to increase. Hot money, of course, was flowing out, adding more pressure on the economy by further depreciating the pound. However, there's good things as well when it comes to devaluation. So your exports become more competitive in the international market if, of course, the price in USD is reduced to match the depreciation in GBP. And of course, it's an opportunity for England to reduce its trade deficit and shift its focus of importing goods and producing them locally, hence making them more self-independent and less reliant on international raw material and products and services, which can further fuel fire and increase their aggregate growth, which is a very, very good thing for the economy. However, in the long run, if better economic policies are applied. Whereas for Brompton's costs, their cost of raw materials for the 25% material that they were sourcing internationally has increased by exactly the same percentages as the depreciation, given the fact that they will have to pay the import cost in USD, which is a global trade currency. Cost of domestic production will lower when compared to the USD parity, which is also a very good thing. If Brompton had a book that was converted into USD, their total overall cost in terms of USD has increased as well, given the fact that they are selling 70%, 70 to 75% internationally. Their book of business derived in USD is probably increased. Their margins have increased. Issues with sourcing raw material, of course, because of the trade friction caused by Brexit. This may increase the prices of sourcing raw material if the government is not opening letters of credit, or if there are trade issues relating to supply chain that increase the prices for Brompton. And of course, if their current asset book is based out in GBP, they of course have less when compared to the USD that they would have had before leaving their reserves leaving their book of business to devalue as well if compared in the USD. For revenues, it's actually very good. Brompton, they will have an GBP absolute increase from sales in international markets because those are derived in USD. Hence, they will be able to convert their USD that they have used for sales to convert into using the new currency, which is cheaper GBP, hence resulting in more GBP from the dollar, hence increasing the revenues by a very substantial percentage. And however, the domestic revenue outlook is less when compared with the USD. They won't have their growth of their GBP reserves won't increase as much when compared with the dollar. Hence, they will, if you see against the purchasing power parity of these both currencies, Brompton will take a hit in terms of how much their GBP is actually valued in the international market. What profit maximizing strategies can Brompton Cycles adopt? So given the fact that there's a lot more sales coming out from the international locations, 70% of our sales are derived from international locations and they're priced in USD. Brompton should focus more on growing internationally. They should tap into other markets. They should keep the prices same in USD, realizing in more GBP because of the lower rate of GBP. Increase domestic pricing compared with inflationary figures. They can also increase the prices of their domestic bicycles to match what the local inflation is to kind of tap into more revenues coming in from domestic sales. They can also boost their dealer network by providing them incentives internationally, and of course keep their money in USD because the outlook of pound is expected to depreciate further. Hence, it would be favorable for the company to keep their proceeds in USD. They should also explore other countries for business where they can sell their bicycles and where they're like-minded people, they can use and leverage their fan following to further boost their international growth and, of course, increase their profit margins. And they could further tap into more sales if they reduce their international pricing. If, of course, price elasticity is high and they can capture more market significantly if they reduce the prices. They can also explore cost reduction techniques. They can keep holding their funds in USD, ensuring that they're hedged against fluctuations in the GBP. They can also move their money abroad to high interest yielding assets and, of course, making more money for the bottom line. They can also hedge by booking forward contracts with banks for their international raw material import to ensure that they don't expect any shocks later on because of sudden drops in the GBP. They can invest in R&D to explore 100% domestic production. This involves, of course, procuring raw material and, of course, developing. And they could also source from countries that have significantly experienced devaluation as well against the dollar. So countries that are on the same economic trajectory, maybe they can provide cheaper alternatives also because they've also depreciated their currency or devalued their currency. Hence, could be a good opportunity for us to source further cheaper goods than the other markets. So I think we have good strategies to follow for Brompton, and some of the references that I've used, I've listed them here. And of course, I used all my knowledge from the Quantic economics module to kind of develop these strategies. So that is it for today. Thank you so much for joining. I hope these responses get me a good grade for my case study assignment. Many thanks.